guys, so this week was my 6th week trading penny stocks with real money and my best single trade so far. So it was a first green day bounce setup, so when a stock's had a big run up, it's pulled back and then looking to play it for a bounce. I'm so pleased with this one because I had a lot of conviction in the trade, and I was looking at it the night before and was able to recognise that it was an A+ setup and was willing to size up on it because it ticks so many boxes. So it was really nice feeling to start to differentiate between B+, C+ setups and ones that are prime. I had also been starting to create some data on similar setups that I've seen work really well and putting all the similarities into a spreadsheet, so things like volume, percentage gain, lots of other things, and screenshots of how the charts should look. So I put this potential trade setup into my spreadsheet and it was matching so much of the criteria. So that really gave me the extra confidence to take this trade and to size up on it as well. My data also gave me an indication of what percentage gain I could expect from this trade, which helped me refrain from selling the majority of my position too soon, which I definitely normally would have done. So I was really able to maximise my gains on this trade. So let's get to the chart. Right, so the ticker is GPUS and this is the daily chart, and can see here this is its big day one. It's moved on high volume and it's gone from about 137 to highs of 907 on day one. So it was up over about 560%, and considering the market's been a bit quiet at the moment, that was a pretty big move on the market. So this was the day one, and then this was its first red day, and then here is the day that I played it for first green day bounce. So looking at the 1 minute chart first, we'll go over here. So this is the day one, and then it's pulled back on day two, and it's just sort of stayed in this area. And the reason I was looking at this to bounce on this day was because the volume, for one, it was really high on day one. It was 298 million. So then on day two, it had gone down to 9 million. So that's a significant drop in volume, which is important because on day one, shorts will size in according to the volume. And then day two, if the volume is significantly lower, which it was, they can't get out without affecting the price. So if they start to cover, they have to buy back the stock and the price is going to grind up. So that's what I'm looking for. And I'm also looking at where, first of all, I want to see that this is kind of basing somewhere. And if we go back to, if we look at the after hours first, ideally I would have liked the after hours and pre-market to hold day two's low, but it didn't. And it didn't actually break it that significantly, so that was fine. And if we look at where it was basing, it was at 433. And I can see pre-market on day one, it had resistance at 433. So that's just another nice little tick box. So I was looking at this the night before thinking if this kind of hangs in this area tomorrow, then I can look to play that. And I do work on Wednesdays, but luckily my laptop had broken at work. So I was without a laptop. I was very limited of what I could do. So I could actually take this trade basically. So I got in the next day at, let's have a look. So I was looking at the pre-market data. Wanted to see what it would do pre-market, and we can see here it actually broke the after hours low, but it was a nice green candle, so that was quite a good indication that it was going to push off this risk. So my risk level was going to be the low of this candle, which was 635. I think I might have set it a couple pence lower. So there wasn't much liquidity pre-market, as we can see, and the spread was quite large as well. So I was watching it here, but I couldn't get in because the price was just too high to buy it. The spread was too large. But I had good patience, I waited for it, and I managed somehow to get a price of 4:55, I think it was around about 4:30 US time. So 4:55, around about here. So I couldn't have got it at a much better price, to be honest. So I'm loving the entry price on that. So then, yeah, went on a bit, came down here, but I don't think you could have got in here around that price as well. So then it started to grind up nicely. It was such a comfortable trade. Also because my thesis was so strong, my risk was good, my entry was good. Everything allowed me just to let this play out. So that was pretty nice. And then you can just see here, during pre-market, it starts to have these little moves upwards. And this is quite a big move actually. So I sold some pre-market, a very small piece at 5.59, around about here, and then I sold another piece pre-market, so that was 20% gain right there, and then another small piece at 6.02. Now normally I would definitely have probably been all out by now, because sort of 20-30% gains are what I'm aiming for as a significant gain, but because I've been doing my analysis and tracking this kind of setup, I've been able to see what kind of percentage gain they typically have, and my analysis was telling me you need to wait for at least a minimum of 40% to sell the majority of your shares. So I stuck to my plan and I waited for that 40% mark. So let it go on pre-market, and then market opened, and it was just a push straight out the gate, which is just the ideal trade really. So I just sold it all along these profit targets really. And my best sell was sold the majority at 6.32. My average sell, was 6.32. So that is around here. And my best sell was 7.35. So waited for this mark here. And my final profit target was up here at around 8.80, which it actually very nearly hit, but I was all out by 7.35, which is fine. So that was a 39% gain overall, which is my biggest percentage gain in a single trade so far, so I'm really happy with that. And I sized up for this trade. When I say sized up, I'm on really small size anyway, so I typically will take $30 to $40 on a trade, but for this one I put the big $91 on and made like $35 on it. So yeah, again, the thesis about why this can bounce is people that have missed a big run up want to get in, but also those shorts that have sized in on day one, if some volume starts to come in, they're going to get squeezed and they're going to have to cover their position, and that's going to essentially send the stock upwards. So that's kind of the theory behind why this can work. Yeah, and the other reason why I'm looking for this day for a bounce as well is because the retracement was around about, I think it was about 50%, so it's a significant retracement from its day one. If it was sort of 20%, 30%, then I wouldn't be interested. So that's just another thing that I look for on bounce days. So the feeling of having a good thesis when taking a trade is a complete game changer for me mentally, because I knew when I took the trade, this was a perfect setup, and if it didn't work out, this was still 100% the right trade to risk on. I know where I can risk and where I'm comfortable to enter if it allows me, and the rest is really out of my hands. So it just takes the pressure off having a good plan in place, whichever way it may go. As mentioned, the data tracking on my spreadsheet really enabled me to execute this trade well. And this avenue that I'm finding of creating data, tracking similar trades is really helping me to find my own flow with this. And my personality is very much kind of methodical. I like logs, I like information. So this is really helping me to take trading in a direction that fits me. And I'm definitely finding my creativity in that sense. And if the market's quiet, I'm just using that as a blessing that I can dive into my spreadsheets and develop and find new edge. So I hope this was interesting. If you enjoyed it, please feel free to like and subscribe, and I will catch you next Sunday.